Hopefully you guys are having a good day. Good, mate. Nice and sunny and breezy. Oh, I hate you guys. It's always sunny out there, man. Come on. It's really, really cold here. When I woke up this morning, I woke up at like 6 a.m. and it was literally freezing, mate. Literally, like, completely frozen already, actually. Turn on the aircon because, can't live without it, and just to sort of go up with the flow. And then when I was driving to work, my hands was completely frozen and like so hard to drive. Anyways, hopefully you guys are having a good day, whatever you are. Let's get to the point, because we did had USA PPI yesterday. It was quite of a surprise, that surprise element in a sense. So let's have a look into USA CPI and what it tells us, okay? Because a few interesting points I want to mention, and the first one is the USA CPI that we got 2 days ago and the PPI, they're telling different stuff. They're telling a different story. So that's what I want to share with everyone. Will that make the stronger DXY for next week as well, or was just for today and yesterday? And then we're going to have a look into Euro dollar, pound dollar, and US dollar, Japanese yen. Basically, the trades we got yesterday, I forgot to put it here, but we also had the Aussie against the US dollar. Just remember that now. But anyways, so let's have a look on what we got. But before we go any further, I need, as always, put the risk disclaimer up. So I'm going to leave it there for a minute or two, and leave it there for you guys to go through. And then once the minute or two is finished, I come back and we can start the meeting. Just a second, and we'll be back after a minute or two. Okay. Someone sent a message. No sound. Oh yeah, because we were just sorry, Shaq. We were just going through the risk disclaimer, and I have to be muted. Let me just come back now. Perfect. Okay. So, as I was saying, for those who just got here, so welcome everyone. Let me see if there is any new people. There's no, I don't think so. So that's good. But you guys already know. If you guys have any questions, please just send it over into the chat, and I will definitely make some time to answer those questions for you. All right, so let's open FinLogix first and go into economic calendar. And then we go into select USA, and then we go into medium and high, and I'm going to send this link into the chat so you guys don't need to go and do all of this. Perfecto. Now I'm into recent and next, because what I want to look is from yesterday, the PPI, and we can already see it right here. So PPI month over month and core PPI month over month. Let me actually bring this week, because I want to compare with the CPI. All right, so on Tuesday we had the CPI, and yesterday on Wednesday we had the PPI. A few interesting points that are really dragging my attention to it, okay? I've mentioned about the CPI on Tuesday, and I've said that a higher CPI basically means that the consumer is paying more than what it were paying before. Okay? In a plain base, that's what inflation really is. Okay, in a plain base. Now, when we get to a point of more a sense of what is actually generating this inflation, that's when we need to pay attention, because the CPI is for consumers, right? And then we got the PPI that is completely opposite, that is for producers and the manufacturer, basically, okay? most of the times the manufacturer don't pass. Sorry, most of the times the manufacturer pass the inflation that they're paying to the consumer. Okay, and what does that mean is pretty simple. When we have the inflation being passed to the consumer, is basically the producer saying, I don't want to pay this extra cost. Who's going to pay this extra cost is the consumer, the end consumer. Okay, so that me, you, your family, your friends, etc. Interesting enough, yesterday we had a release of the United States PPI month over month coming at zero. Yeah, so no inflations for the producer end. Interesting, right? When we look for the core CPI, that excludes two factors, energy and food prices, food producers, they're coming to zero as well. Interesting, huh? Now, the expectations was at the expectations were at 0.2%. So for the core CPI, was expected to drop 50% from 0.4 previously to now to 0.2. And then for the nominal PPI, was expected to be at 0.2 from previously 0.3. Very interesting. Now I ask yourself, how is that possible? That's a really powerful question, because when you stop and think, the June release, so it's always in a sense delay. Okay, so we got the CPI for June after 15 days. But what I want to bring the attention is the tariffs are not working they're not making inflationary moves just yet. So what I'm looking at is ThinkLogix gives you a really good tool that you can, let's say you want to have a look into the core CPI. So just open in a new tab for the nominal CPI as well. So I can actually see the chart. Okay. And then let's put into 3 years or even 5 years. There you go. The highest of the core inflation for year over year from US was 6.5%, 6.6%. Okay. That was the highest, I think, right? Yeah, 6.6. After 6.6, we've had a decline to 6.3, 5, blah, 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 and then until now to 2.9. So inflation, if you literally look at the few last release, the lowest point was 2.8, and then now we have a 2.9. The forecast was 3. So in a sense, that was good. Okay, that was good. So below expectations. But when we try to sort of zoom in, like here, you can clearly see that there's no uptick. So yet the tariffs haven't been implied into the economy. And the reason why I want to bring attention for everyone here is because they are not either showing on this part, okay, on the PPI. Because when you look at, when you come to the PPI, let me take this one off and put into chart, line chart, 5 years. I wish we could just, sort of put one on top of the other, but you can clearly see that it has been very bouncy. Okay, like not much happening. It's just going. Actually, let me do something here. There you go. It's basically doing on a consolidation, right? You can clearly see that it's from negative 0.5 to positive 76, but never both 1% since 2022. So in a sense, it's good for the PPI. That's pretty good. Now, the problem is most likely those companies that has to buy raw material from outside of the US, they still have in stock the products that they bought before the tariffs have been applying to. So they have a cheap stock at the moment, but most likely soon, very soon, that stock will run out, and for that reason, they will have to buy new stock. And when they buy new stock, they're going to be buying with much more, much more expensive. And for that reason, most likely then the PPI will rise, and therefore the CPI consecutively will rise as well. Okay. So there's not much secret between PPI and CPI. Well, at least in my opinion, I'm trying to explain in a way that is simple enough for you guys to understand that. Does anyone have any questions so far, or can I go ahead? I think there's no questions. Okay, so that's pretty good. So that being said, my next question is strong DXY for next week. Will we get a stronger US dollar for the next week as well? Well, let's have a look. So soon as the DXY, there you go. Soon as we had the PPI, the reaction was quite surprising. Okay. In a sense, it wasn't that surprising because we definitely had a lower PPI, so therefore the US dollar would be weaker. Because the market is priced in more cuts from the Fed. In a sense, it didn't, but it's okay. But it's just the market sort of repricing itself, and it happens quite often every single day. And we need to understand this. But the move didn't change. And remember what I've said to everyone. This is not a change of character or whatever would you like to call, because the biggest point here is showing us that is not a change of character or anything like that, is the Fed continuing to hold when they do have the possibility to cut, and the market knows that. So for this reason, and for many others, the market would just continue to long US dollar. Okay, it doesn't matter if it's risk on or risk off. The market would just continue to long US dollar. Can you guys hear me? Let me just do something, just a second. Is it better now? Can you guys, okay, so loud and clear, okay? Yeah, cool, that's good, okay. Because I didn't do anything, so, okay, let me share my screen again. Perfect. Let me know if the audio quality changes or something like that. I can just always put the headphones on and I'll take off the headphones. Sometimes it happens, I don't know. But that's okay. All right, cool. So coming back, so I don't believe that we're going to have a reversal into DXY. Okay, I continue to believe that we're going to see a continuation of the bullish trend for maybe another quarter, even. All right. Let me just go for 4-hour chart. Sorry. Oh, it's not going. There you go. 4-hour chart. And then we can just zoom out, and you can see that we are very close to the box that I've mentioned right here. Okay, so we're actually pretty much in the middle of that. But things will get very, very interesting when we have a break above the 99. Okay, when we have a break above the 99, and I'm most likely expecting that to happen into the next coming weeks or in the next month of August. I think most likely we would have a really big move to 94 and then sort of just breaking through that area and continue to go higher. Now, I do received a question saying from Anderi Milek Kun saying, where do you expect DXY to go to? That's the golden question, my friend. And that's exactly what I'm telling. So if we have a break above the 99, let's say 99,500, because a psychological number, just correct that. And there we go, pretty good. Let's say we have a break above 99,500. It doesn't need to be exactly 99,500 because we can see that the highest point of this moment, this peak is at 99,424. Okay, but that's fine. Yeah, 99,421. Okay, that's okay. So if we have a break above this this area, most likely we'll see the market trending to 100. Okay, so the initial expectations are to go to 100. Right, so let me just grab a pen here. So what we can possibly see is maybe above here, it's going to have a pullback to middle of that trend, that box, and then just to move above the 99,424. Okay, so that is pretty much what I'm looking to the US dollar. Now, that being said, if now we just go ahead and think about, okay, US dollar is literally the euro dollar opposite. So if we go to euro dollar, what we're gonna have is a continuation to the down move, right? Let me just do that. And where I'm expecting the US dollar to be, right here. Okay. I'm literally looking for the US dollar to be right here. Because first of all, we have this box, right? And second, the US dollar is pretty strong, and I think that the scenario will continue to be the same due to the Fed not looking to cut this month and not looking to cut into October. Okay, only September and December. So if we come to the CME, we can see that. Let me send this link into the chat. Sent. So if we come to the CME, we can see that for 30th of July, we literally don't have anything. Okay, it's 97.4%. So it's very, very minimal chance to cut because the chance is just 2.6%. So it's literally zero. Well, there's a chance, and that chance can always happen, my friends. Like we saw the RBA this month. There was a 90, I think it was 93. I don't know. I don't remember. It was like 90 to 95. And what they did, they didn't cut. Okay, so that can happen the opposite way as well. So 97% expecting no cuts. It can come a cut. We never know. Okay, that being said, as I was looking at, as I was saying, you know, the most important thing here for the US dollar is the Fed continue to hold the interest rates higher for longer as possible. Okay. Now, when we look to September, I don't know if you guys remember. When we look to September, I don't know if you guys remember, but I've mentioned about September being a potential of a no cut if the inflation came higher. Okay. The inflation didn't came higher. If we look in here, the inflation came in line and as below consensus. Okay, so these two things definitely made us a bit of a tricky situation. But if you remember the numbers, this was like 30 something, and here we had a 5%. Okay, so that's exactly what happened. So that 4% that was 5 moved to a cut because these guys are expecting 50 base points cut. So they're not going to expect out of 50 none. Okay, no, they're probably going to move to 25. It's more rational. Okay, so therefore they move to 25, so increase the rates, increase the probability of that rate cut. And these guys here, some of these jump to here. They didn't jump to here because that makes more rational for them to jump to here. Okay, if it was like much lower, then it would make sense for these persons to jump to here and these ones to jump to here. So I hope you guys understanding that, but it's not the crucial part. What I want to show you is that this is very close to this one. So no cut is very close to 25 cuts, 25 base points cut. So what we're going to get here is a really challenging situation. Okay. And the market is looking at these and it's looking at with a really really strong eyes into it. Okay. Especially when you go to October, because October is priced 25 basis points and it's not priced from here. And now it's the catch, ladies and gentlemen, because when we look to October, if this guy is expected to do a 25 base points cut, right? So from 52.4% is expected 25 base points cut. So expected to be the rate from 4 to 425 and not 425 to 450. When we come to October and the expectations are to maintain the same. Previously, it was to cut. Okay. And then when we look to December, we have a 25 basis points priced in, 42.5% expected. Okay. So this is really important to be sharpen these analysis, to come here every single release and look at these two. Okay, I've sent the link into the chat. Yes, I did. So you guys can go access for free. Let me just close my Teams so it doesn't pop up the messages. Perfect. Share my screen back again. We're back on track. All right, so that's the first thing. Okay, so pay attention to this and always look for the CME. It's a free tool, very easy to use, no hustle. All right. Now coming back to euro dollar, and with that say, if the Fed continues to maintain the rates higher for longer, that is exactly what I think it can happen. We're probably going to have a US dollar higher and a euro dollar down to 1.15. All right, so market is down 1.15 is my target. Does anyone have a trade on at the moment? On shorts euro dollar? Send it on the chat. Cool. Now, looking at the pound dollar, oops, sorry. I don't know. Okay, let me just go this. The old way, GBPUSD, there you go. Yes, me. So Stuart, do you have a short euro dollar? That's pretty good, man. Nope, I got stopped out after the PPI figure. Yeah, same. Same happening here. This one as well, and this one as well. Yeah, so I just wanna circle back into this trade here that we had for the pound dollar yesterday. I still catch the trade, okay, but the actual thing wasn't to be catched because we saw that we saw this breakdown on the lows, and then we saw this weeks of rejections, and then we saw this big pump up here, and catch all order and literally straight into stop losses. So I continue to believe on a stronger US dollar and a down move to 133 or 132 even for the GBPUSD. Okay. But as always happens, and I've got stopped down. All right. Now, moving on, US dollar yen, we got stopped out again as well. Sorry, not again. But if you got stopped below this low, then you're completely fine. Okay. So he would steal into the trade and nicely and running. Okay, cool. Now, what do I believe in? What do I believe can happen with the euro dollar and the pound dollar? And also, let me just bring up, because I forgot to put it in here, but we had this trade here. So this trade was very good. And this is a take profit. Okay. Either way, remember yesterday I told you guys that you need to, if you have a position already open, you would need to close it and then open again just before the PPI. Australian dollar is one of the best, I would say one of the best ones to trade against when the US dollar is strong. Okay. And I'm going to tell you does anyone know the reason? I think I've mentioned that before. No one knows the reason. Interesting. Okay. I'm just going to let everyone know then. So, the reason why to trade US dollar against the Australian dollar is the best reason to trade shorts when the US dollar is strong is due to the risk on and risk off factors, safe haven currencies, basically. Okay. Australian dollar is one of the worst safe haven currencies that there is in there so far. Okay. Um, the reason is because the Australian dollar is not a risk off currency and it's a risk on currency due to the commodities sector here in Australia. Okay. So, whenever there is problems around the world that is sort of a risk on or risk off, Australian dollar tends to perform better. Okay. So anytime there is a risk on, I would look to long Australian dollar against its peers, like, or even New Zealand dollar. Okay, both of them. Australian dollar against US dollar, euro, Australian dollar against euro, so short in euro Aussie. Australian dollar against CHF, so Aussie CHF long, etc. All right. These are pretty good trades to be done into the market. And that's how I think it will be continue to follow for the next 3 years, just because we do have possibility of Trump continue to be hit risk on, risk off, risk on, risk off, risk on, risk off, and we don't change from there. Okay. So that being said, now you guys know why Australian dollar is one of the best currencies to short or long, depending the scenario of the market, against the US dollar. Cool. That being said, now, again, this was a beautiful trade. For those who were here yesterday, I've mentioned about if you had the trade already open from Tuesday, I've mentioned on Tuesday, I would say close the trade and then just, sort of wait for the pullback and then reopen the trade so you don't pay swaps. If you were a little bit more patient and waited for the 61 pullback, then you got an entry. If you were a lot more in a hurry, you still got a good trade, very similar. So you got 5 to 53 pips take profit. And then on this one, you got 52.8 pips profit. Okay, take profit. The stop losses was pretty much the same because it's very, very similar risk reward. Yeah, so that's about it. So these trades are pretty good. So let's say 53 pips. Let me just bring my calculator. So 53 pips positive plus euro dollar. So for those who waited the market to come back at this area, just zoom in a little bit. Perfect. For those who waited for the market to come back in this area and then short it again, you are probably around like what, 100 pips? Yeah, 112 pips. So plus 112 equals 165. And then we had two trades stopped out on GBPUSD. So 20 pips minus 20. And then US dollar Japanese yen minus 52. So still 93 pips profit. So if you were using one lot, you would be make basically $930. If you had a 003, you would have made $93. If I'm not wrong, depends on your leverage actually. Sorry. Yeah, that's going to be different from everyone, but it would be around these numbers. Okay. Now, what do we expect for next week? So I've had a look into the economic calendar. We don't have much major things coming into next week, but the week after we have the FOMC. As expected, we're not going to have any huge moves. Okay, we won't have any fancy sort of things happening here, but it's going to be quite interesting to see how that will go on the statement and on the speech. Okay, these are the two main things that I'm looking forward for 30th of July. Because the rate we already know they're not gonna do anything, but what he wants to say, what Jerome Powell wants to say, that's definitely something I'm looking forward. So having that in the back of my mind, sorry, just drinking water. Having that in the back of my mind, what I'm looking is euro dollar continuation down to 1.15. GBP US dollar continuation down to 1.33 to 1.32. Okay, so around 33 here, and then 32 all the way there, back there. US dollar yen. If you got into the trade and if you still want to trade that, as I say, the main take profit is at 149,700. So that's the main take profit. You could most likely define this. You could most likely extend the take profit to 150 as well. Okay. It's going to be completely up to how much you want to carry this trade in if the scenario don't change. All right. Um, in 3 days, yeah. So today is the 17th. So on the 20 of July or 21 of July, I'm not too sure what day is going to be on Japan, but we're going to have the Prime Minister, not Prime Minister, we're going to have the elections, okay? We're going to have the elections on US. That's going to be immensely huge, important, okay? So just pay attention and flick through because I did a blog into this. All right, go into the ACY website. I can show you guys right now. Come into learn and go into market analysis. Go into my name, Luca. That's the one I did today. So if you go to this one, you're gonna have sorry, not this one. This one, can't remember now which one it is. See, that's why it's good for you to read. Ah, there you go. I guess it's this one. Yeah, you should go and read this article because I do explain a little bit more about the potential. And as I've mentioned, like this was when was that? It was like 9th of the month. So I literally called that up move on US dollar Japanese yen. So targeting 148 and 148 650. And that's exactly what happened. Let's go to the 4-hour chart. So the market was literally here when I've called that, and at 148, and I was straight to 148 758. So that was literally a call. Okay, so that's why it's important for you guys to read every single day these blogs. I literally post one a day. Cool. Right, so that's pretty much it. So just going run over again, the USD PPI, what they tell us? They tell us that the tariffs are not yet full priced into the economy, and most likely we will have a surprise very soon. With that being said, the CPI is still under the hood. We can already see some sectors like furnishing sector, household, etc. We can already start to see that a bit of a interesting, very, very interesting part happening about the CPI, but on the PPI is still neutral, nothing happening. Okay, but bear in mind that very soon, when no one was expecting, we're going to have a pretty bad effect from the tariffs. Stronger DXY for next week? Yes, I continue to believe on a stronger DXY. So stronger US dollar, basically, in a sense. Sweet says, read Trump could fire Jerome Powell in 8 months. Is that a rumor? Well, that's just going to show how the central bank's not, that's just going to show how the central bank is not free in a sense. You know what I mean? It's going to be really bad if it does that, because something very, very similar happened in Brazil. The president of Brazil was saying, oh, the central bank should lower the rates because that's too high and it's making my job harder. This, and that. And then he founded a way to like fire the central bank chair and hire someone that was on his list, expecting the person to reduce the rates. What did the guy do? The guy actually put it higher. Okay, so it's really tough, man. I don't think it would happen. I think it's just a rumor. But if it do, that's just going to show how pathetic it is. Okay. Now, a stronger DXY for next week. Yes, I continue to believe on a stronger DXY. Especially for a few things, coming into end of the month, we do have a possibility of the continuation of higher rates for longer from the Fed. 30th of July will be really important for that, and yeah, I still believe on it. All right. Now, euro dollar shorts, pound dollar shorts, and US dollar yen longs. Can I wait for pullback before joining too long on US dollar Japanese yen now? Look, it's going to depend into your strategy, right? Because I really don't know where the market's going to go, to be honest with you. I wish I knew. Sorry. 15. Yeah. So I really don't know where the market's going to move. It's going to be either up or down. But what I'm trying to do is giving you the macro analysis that you guys can sort of expect to get and define where it's going to be up or down. But entry wise would definitely be up to your strategy. Okay. Cool. All right. We got to another week. We got to an end of another webinar, end of another week. Hopefully everyone could have a pretty good week with me. If you have any questions, please bring it over for next Tuesday. We'll be here from 4 to 5 p.m. On Tuesday, Wednesday, and Thursday. Okay. Awesome. That's it. Hopefully you guys have a good weekend and chat with everyone back into the next week. Thank you so much all. Have a great rest of your day and I'll chat to you next week. Bye-bye.